In today's video, we're going to have a look at the stock market week ahead. We're also going to have a look at some of the best swing trade opportunities that there is in the market today. What's the crack, everyone? Welcome back to Buy, Hold, Sell. I hope, of course, you are all well. Lovely, sunny, hot, sunny Sunday here. Enjoying the weather. A little bit too much bacon. It is hot. But let's have a look at last week, because last week was not hot. The stock market, pretty flat, pretty sideways, kind of downwards trend. Let's have a look at the week in the S&P performance. You can see here, Microsoft, some of the bigger players are still doing okay, but our big semiconductors, Apple, the big boys, the sort of FANG stocks that they used to be, sunk. Not massive, but it's still sunk. Tesla down 3% in the week, Amazon slightly up, if not just average. We can still see our energy supply, as we talked about in the last week's video, doing well. And I just want to talk about last week. So I said, look, we're on a bull run, still in a bull market. The market's going up. Looked at the likes of Nvidia and different plays last week, and I said, look, these charts look great, but I didn't say I was buying. And the reason I didn't say I was buying is because they've had a run, but more so, I'm conscious of the AI stock market bubble that we have. I'm going to keep a close eye on Nvidia, and we will talk about Nvidia throughout the video. I am wary of that, very much so. I feel that could pop and that will sink the market. That might be the main catalyst to sink the market. But look, the market's sold off for the reasons that we talked about in last week's video. I said on Wednesday, the Beige report that came out potentially would be enough to shake the market, and it did shake the market. Why it shook the market, I have no idea, because I said last week I fully expect more rate hikes to come. For whatever reason, this market seems to forget about it one week and then the next week to go, oh, maybe another rate hike, and then the market sells off. It's been doing this now for over a year. It's up and down, and within the up and downs, there is plenty of opportunities to make money swing trading. Some great trades. I opened up a great trade on oil, again coming back to the commodities. The energy sector is starting to turn around. Energy, oil, gas, it's going one place only, and we're going to have a look at some energy stocks in a moment. So let's just have a look at the S&P performance then. Last week we kind of said, right, we were doing well. Typically, I said I don't foresee the run ending. We have then fell below and we've started to sell off, but I personally really don't believe that this is the start of the crash. We've done this so many times. We've sold, we've went back up, we've sold, we've went back up. You know, it's fell below these areas a lot. See here, but it's always pushed on. And I'm just not sure if this is the momentum. I'm looking at the likes of the RSI and the MACD, and I'm still seeing buying. I'm still seeing a lot of buying pressure. This is upwards. We're not massively overbought or anything. So I think it's just a healthy cool off, just the usual bit of bad news in the market, and the market's just unstable. I'm not worried about this. I'm really not. If you strip it down to the 4 hour, we can even see there was a wee bit of buying pressure coming in towards the end of the day. So that to me is also encouraging. But we will see, and it very much could be the turn. I'm not saying that it's not, but I'm saying from a chart perspective, it just cools the jets a bit. It makes you have a bit more logical rationale behind it. You're just going, I just don't think this is it. So let's have a look at some of the stuff that wants to come, because there's one big catalyst that could potentially swing it either way, and I'm going to throw my hat on the side that I think it'll be a bullish thing. But let's just see what the markets can expect. Next week, we'll get the latest inflation readings for August, along with the last month's retail figures, an interest rate decision from the European Central Bank officials. The week will also be highlighted by Apple's annual fall event, expected to reveal its latest products. And that's what I think could be a major catalyst for the SPY. You've seen there last week, it sold off Apple about 5-6% over the course of the week. It's probably due, and for Apple, that is one hell of a pullback. Apple, bear in mind, when everything was sinking 18-24 months ago, I did my video saying, this needs to crash. This is the one. This goes down, that's when you're in a market crash. That has never fully ever happened and has never played out. And it has always been resilient. For that to fall back 5-6% in a week, that is a pullback. That is one hell of a pullback, to be honest. So what you'll find is that's probably brought the market down a lot with it as well, because it is such a weighted stock. I'm not entirely sure right now of the percentages, but it's anywhere between 10 to 13% weight. Out of the top 500 companies, Apple is at least 10% of that weight. So if it goes down, it takes the market with us. But generally, on the back of this type of news, it could pop. It could be some great reveal, maybe a bit more talk of the technology, anything like that. For the VR headsets, this could push the market following a massive sell-off, obviously, as well, beating down stocks like the rebound. So I just fancy this week to be half decent. But look, these things like the inflation data, if that's going the wrong direction, it's going to pull it down. If the European Central Bank comes out and really bearish, it's going to hurt all world markets. So we're going to watch for the CPI data on Wednesday, and then the Apple. They're the key events, really. And the ECB meeting then, interest rate decision on Thursday. So it's going to be bumpy. And there's also the United Auto Workers labour contract expires. It's like most of what's going on in Europe and the UK. Everybody's on strike looking more money. If they can't get a deal here for the likes of GM Motors and stuff, their labour, people that make these vehicles, are actually going to probably go on strike, which is only going to hurt the stock price. So be wary of that. So if you're in any of these stocks, just take a step back and go, right, where am I sitting here? Because this could get very bumpy. Then on the flip side, if there's a great deal done, stocks probably baked a lot of that in, it'll pop. So, you're rolling the dice there. So let's have a look a bit more into the inflation data. CPI is projected to have risen 0.4 last month, which would mark the fastest monthly increase since January. On an annual basis, consumer prices were likely up 3.4%, accelerating from July's 3.2%. Likely rose 0.2%, earlier 4.3% year on year, decelerating from 4.7 July. This would mark the smallest annual increase in 2 years. So again, usual. Anywhere around that, market's probably going to be steady. But either way over that, it'll have either a positive or negative effect. And that's, we've seen it, the tale as old as time. It's a good one for a swing trade. I love jumping on the S&P when these types of things comes out because you always normally get a real market swing. So what I like to try and do is see what way the swing's going, jump on it, in and out, smash and grab, usually with a bit of leverage because, I like to live dangerously. So let's just look at Apple's momentum then. You can see here on the day chart, it obviously sold off like we talked about last week, and then it got its nice little rally, but then this 5-6% really, dragged it all down. It really dragged it down, and it kind of looks like, we're about to cross over and continue on down. But look, the main thing is here, we're well above the 200. We're still in a bull run, and we've got a big catalyst coming this week, beating down stocks like the rebound. I'm looking at it, and the probabilities to me says it's going to be more of a better week for Apple, and with that, should bring a better week for the S&P. But there's no guarantees. If the news is wrong and anything like that, pants down. We talked about some swing trades. I'm starting to get back into the swing trading after a long hiatus. I thought I'd bring up our screener. This is a screener that calculates where the moving averages are, when we've crossed over, the MACDs. It does all of this crazy stuff. I've inputted all this data, and then it picks out from the market stocks that meet that criteria. That's effectively a screener. And all this is access to the course, give you all of this in the course to let you see. You can go through and adjust the suit and pick out the best stocks. But here is the list if anyone's interested. You can see at the top, the likes of Intel. If you look down by the sectors, then you got technology, a lot of energy and utilities, and that makes sense for all the reasons that we talked about. Even look at last week, it had a great week. The energy, the oil, all that, it's all going back up again. As inflation fears are starting to freak out, oil prices are rising, we're coming into the end of the summer, there's just these trends that always happen as well. And again, if you go to the second page here, that's all there is out of the top 500 companies. Energy mostly leading the way, and the industrial side of things. If we actually look at some of these picks here, General Electric Company. Now this stock has had a real big push. This stock has had a phenomenal run ever since it got over and above, which is nearly a year ago. If you bought this a year ago, you would be sitting up 100%. And that's just a swing trade, basic swing trade. Get above the 200-day moving average and push. And you wouldn't sell here. You would touch the head off the 200 and you push on. Now, it depends on what way you're swinging on a weekly chart, 4-hour chart, whatever. Different strokes for different folks. Usually I try to play the 9-day moving average, and that's when I exit trades. But some you would stay strong with. Regardless, if you sold out, you would have bought back in again, and there has not been really any opportunities to sell, and that would be even 86%. So it just shows you, even in this market, it's been hard. There is plenty of winners out there. You've just got to use your screener. You got to know how to swing trade, and you've just got to keep your eyes peeled, be patient, wait for the right setup, and you are at the races. Personally speaking, it wouldn't be probably a trade now that I would be looking to open, but it's doing very well. Nvidia then is the other stock that we want to talk about. Look at this run. Wow, like it has not stopped. As I said, you would be up, 200%. Wow, like it's just incredible. Since the start of the year, if you put your money in Nvidia, what a stock that I have been in and out of many times, considered holding long many times, and unfortunately, it's not been a stock that I've done anything more than swing trade. Unbelievable hold. So well done to anyone that's just sat and held that. But I do think the AI bubble and stuff, I couldn't touch it with a barge pole. Wouldn't be surprised if I'm sitting here in 6 months and it's up another 50 or 60%. But it's just one that I'm going, no, I think the risk reward is just too much for me. I've got enough risky plays as it is without that bubble bursting. Especially right now when you've just got to sell. Now, if this was the turn and maybe start pushing on, bit of decent news in the market, it could be a decent play to be jumping back in, but I would be treading very carefully on Nvidia or any of those type of AI chip makers. We're still getting back into the swing of things on this channel, but I just want to wrap up the video by sort of talking about, well, some big news coming out of China. It doesn't look to be the greatest rebound. Exports, imports looks a bit ropey. We talked roughly on it last week as well. So you got to keep an eye on that. There is a lot of talk of this is the market crash coming. September is just a bad month. We covered it in last week's video about September historically always being a bad month. Not off to the greatest of starts. While I fancy this week to be potentially strong, it could still be a very, very bumpy road. So just tread very carefully. I would still be sitting sort of in and around at least 40% cash. I've been sitting cash heavy for a long while, although I am strongly considering putting more money in some of our longer holds, the likes of Premier African Minerals. I did a video this week on it. It's just fascinating. It really is, but it is a high risk penny stock. We will be covering other stocks this week. Going to try and get a Codal Minerals video out to get a bit of an update on that. And I'm just slowly working my way through all our videos, ABML, Argo to follow as well. So plenty more stuff to come on the channel. So good to be back. Again, going to keep trying to get these types of videos out and we'll get a wee bit more of our normal format. Do you like also the backgrounds? Is it better doing this? Does it feel more real or should I bring back the green screen? I probably will do a mixture anyway, but any feedback, any comments, please leave them down below. If you're interested in the trading course or anything like that, give us a shout. Discord links are all there as well. And I will catch you in the Discord throughout the week and I will see you in the next video. Peace.